Now I want to take a closer look at the investing in the gaming sector world and some travel and leisure names as well. Joining us right now is Stephanie Link, Hightower Chief Investment Strategist and Portfolio Manager and a CNBC contributor. A lot of folks have tried to stay away from these stocks because they didn't know what was going to happen, and now here we are. So which ones do you like?
Well, I think you want to be very selective on travel and leisure because we are going to see fits and starts in terms of demand, just given reopenings and partial closures, et cetera. I think you want to focus on high-quality companies, good balance sheets, good liquidity. All of the gaming stocks that I cover that I like, Wynn, Las Vegas Sands, and MGM, they're still down a huge amount, Andrew. Wynn is down 48%, MGM is down 51%, and Las Vegas Sands is down 33%, all year-to-date numbers. The one I like the most is Wynn. I actually own it because they do have quality assets, not only in Las Vegas, but also Macau and Boston, and they have a diversified revenue stream. 70% of their revenues is casinos, and the rest, actually, though, is food and hotels, so they are diversified. But the real reason that you own Wynn is for Macau, not for Las Vegas, because 75% of their revenues are in Macau. And I think the China economy is recovering faster than the U.S. economy. We're going to see GDP this week in China, probably for the second quarter, probably running around 2 to 3%. That's a 52% sequential annualized rate. So they certainly are seeing a V-shaped recovery. And with that, I think you're going to see better demand and a better consumer, and they are partially opening in those in Macau in June and July. So the liquidity is okay, 1.7 billion. It's about 18 months worth, and 10% of the float is short this stock. So it's not going to take much for this stock to do better. So that's the one I'm playing. That's the Macau story. If you want Las Vegas, that's MGM because 50% of their business comes from MGM.
Well, Stephanie, let me ask you though, to invest in either of these stocks, or let's just do MGM since that's the Vegas story. What does the timeline in your mind have to be about a return, if you will? I don't know if this is a vaccine bet. I don't know if this is just a travel bet, younger people getting on airplanes, getting to Vegas. What do you have to anticipate? I mean, how much leeway? We're talking about earnings season this season and people looking past it. How many earnings seasons can we look past to make the bet work?
On MGM, you have to be very patient. That's why I'm focusing on Wynn, because China is recovering faster than the U.S. But if on MGM you're talking about a recovery, you're at least a year you have to be patient, the next several quarters. But here's the interesting thing about MGM. They have an aggressive cost-cutting program that they have been doing. They implemented 2 years ago, MGM 2020. And so they cut the dividend, they cut CapEx by 50%. They're very decentralized, so there's a lot that they can do. In fact, 50 to 60% of their business costs are variable. So they have a lot of room that they can do, and they have the liquidity in the meantime, so they have the time frame to do it. So this is not going to be this quarter you're going to make a ton of money, but I think in the next 12 months you will.